Someone who's really taken the concept of liquidity to new levels, has gotten hundreds of thousands in terms of payouts and millions in terms of funding with prop firms.
You want to understand these things because these retail concepts are all used to build liquidity in the market. Not every high and every low has liquidity. Of course, you need to understand this is a very common mistake and it can be fixed with one strict rule. Literally,
Marco Trades is the trader you've never heard of. Up until now, he has kept his liquidity concept secret and well guarded.
liquidity is everything for me. It gives me my direction, it gives me my bias, my entries, A to Z basically.
He has mastered the super simple but specific strategy that identifies market traps that most traders are getting stopped out on.
You have to understand, a lot of people ask me like, then why don't I trade these retail concepts if they somewhat work? They temporarily work, they work for good reason, purposely to...
For the first time ever, he is showcasing this strategy for the world to see on Chart Fanatics, step by step. But also, he is using and trading the strategy live in live market conditions.
All right, guys, wow, highs taken. Let's close out here. Woo. And look at that move. That puts us at across 4 accounts.
On this special episode on Chart Fanatics. Welcome everyone back to Chart Fanatics, the go-to channel for all your best trading strategies with the best traders in the world. And today we are in Miami. We're here shooting some incredible episodes with incredible traders and kicking it off with day one. It is a very good friend of mine, someone who's really taken the concept of liquidity to new levels and really opened up so many traders' eyes. I would say quite a unique style of trading, one that I would class as simplistic, has gotten hundreds of thousands in terms of payouts and millions in terms of funding with prop firms, with traders from all over. So it is a strategy that people really, really love and really want to know. Everyone talks about time, everyone talks about price, but again, they're missing the one key ingredient, which is liquidity. So we're about to go into a deep dive with the one and only Marco Acetoni. Did I say that right?
Acetoni. Close enough.
Close enough.
Should have added an accent on there. No,
Thanks for
great to have you, man. It's an absolute pleasure. Thank you for doing that. I know you literally just jumped off a flight and I've thrown you in the deep end, but where should we begin?
Okay. Well, I feel like the part of trading that everybody struggles with the most is direction, in my opinion. I've taught and trained plenty of traders over the last couple of years, and the most common trait I see is, again, it's a lack of understanding the current direction or the current bias in the market, right? So for myself, liquidity is everything for me. Meaning it gives me my direction, it gives me my bias, my entries, right? All the way down to that, like from A to Z, basically. So if I can dive into this whiteboard real quick to give you a little rough breakdown of how I view liquidity, how I determine my bias, all these different things. So if we have the market trending to the downside, simple stuff. We have high, low, high, and we continue selling off to the downside, right? This high respected previous highs. So this might sound very simple, but yet everyone, they overcomplicate things. So high respected high, simple things. There's now liquidity above this high. So we have to use this to our advantage. Meaning, if I want to start looking for buys, easy target right here, right? So obviously there's a lot more components that's involved, but the most important thing you have to be able to understand is not every high and every low has liquidity. Of course, you need to understand once retail is induced, meaning sellers are entering right here, it moves away. Now there's liquidity above this high.
So in terms of liquidity, how would you define that? If you were to define liquidity, just for those at home who may not understand that side, how would you go about defining liquidity?
Yeah, I mean, I feel like a lot of people like to go really deep with it. And then, like I said before, I like overcomplicate things. In my opinion, liquidity is just resting orders in the market, right? And it's as simple as that. So let's just say stop orders. Usually the best example for myself, what I use the most would just, again, be stop losses. So if I understand certain traders are entering at a high or a low, then I'll understand that there's going to be resting liquidity there.
Mm. So it's essentially just understanding where those orders sit in the market. So as that example you just drew out there.
Yeah, exactly. If I can just give you another one right here real quick, simple things like, and on the uptrend. So since price takes out this high over here, this now tells me the intention behind this move from A to B is now induced buyers into the market, meaning they may think there's momentum, right? Or they're going to mark this as taking a previous high as like a BOS in the market. So once price returns back to this area at the extreme, however they want to look at it as support, Fibonacci, even smart money concepts, they're going to want to buy down here. And once the market moves away, simple things again. Now I know there's liquidity below this low.
So from here, if we were to break it down, we're looking at what most will be seeing as, say, a break of structure.
Exactly. Their BOS, their market structure shift.
OB, could be fair value gap here, could be Fibonacci levels, it could be all of those together. So here in this example, they may take the trade here, and it might even work out, right? It might even work out in their favor. But so what are you looking at then there? As you said, this is now resting liquidity. You're looking at this, what for? Entry, target?
So I need to see this whole picture occur. And I feel that's where people may struggle with the most when they start looking to trade how I trade, meaning you have to be patient. You have to sit in your hands. You have to allow the liquidity to build. You have to allow the market to build liquidity. So again, in this example, you have this high getting taken out. So as you mark the BOS, price returns down to this OB and moves away. Simple things, like let's not overcomplicate it. There's now liquidity resting below this low, period. So if I'm now going to frame out a whole sell entry, I would look to target this low, right? And if I want to look to enter a buy position, I'll simply need to wait for price to trade below the lows. So now we're below the lows down here. You can look for your buys back up.
Hey guys, I hope you're enjoying this episode so far. And don't forget, we send every single strategy breakdown from every episode for free on chartfanatics.com. So the link for that is in the description below. So just make sure you click that. You just put your email in, and every single week we will send you an up-to-date PDF strategy breakdown for you to keep, to learn from, to reference for free. And don't forget, we're also launching Chart Fanatics Live, where your favorite traders from Chart Fanatics will be live trading every single day. I will also be including special guests on the live Chart Fanatics edition. So make sure you go subscribe to that YouTube channel right now. It's linked on the main profile of Chart Fanatics, so make sure you're ready for that. But let's get into this episode. So in this scenario, then, this is where I think it really gets interesting, because one obviously requires patience, as you mentioned. But this is where it gets interesting, because when most people see this then get broken here, that's then a break of structure.
Exactly.
Right? So then therefore they're then looking for the opposite, what we drew out here. They're looking at the OB here, they're looking at the fair value gap here, they're looking at reasons to sell.
Exactly.
So why are they going about that wrong? Like, what is it that is allowing this to take place? Because a lot would then call that just a standard fake out or shake out or whatever it may be, or stop loss hunt, right?
Yeah.
Which most people, regardless of whether they label it that way or not, they're still not capitalizing, you know, in terms of actually being able to identify, okay, when is that happening? How do I take a trade?
100%. And I'll clear this up so I can give you a good explanation to this. So just like we were drawing before, I'll draw out quickly, understanding. So simple, just like how we talked about at the beginning, with the highs, this is the same thing. We have a BOS to the upside, meaning market induces buyers here by taking out this high here. We return back to the low, respect the low, okay, and move away to the upside. So now, again, I understand now there's resting liquidity below these lows. Now, just because we've left liquidity here does not mean right away we're going to run for it. That's just not how the market operates. What I tend to look for now is if we have a high left on the left-hand side over here, and this is an area that sellers are looking to take entries from, whether that's going to be like an order block, so we'll write down like an OB or like a POI. Okay. So this is an area that sellers are looking to take entries from. Again, you want to understand these things because, these retail concepts are all used to build liquidity in the market, right? You have to understand, a lot of people ask me like, then why don't I trade these retail concepts if they somewhat work? You have to understand that they temporarily work. They work for good reason, purposely to induce liquidity into the market, right? If these concepts never worked, smart money, support resistance, then why would people trade them?
Yeah.
Right? So again, sellers are looking to take entries up here. The market moves down to the downside. And maybe sometimes what tends to happen as well is since we're now trading back at this low and we understand structure traders, retail traders, any sort of trader looking to go long, they're going to look to enter in this area. So in here. So sometimes what occurs is a reaction up. Okay. Again, understand that buyers are looking to take entries at this low. The market gives a pullback, and then sometimes what I can do is I manage to catch a sell entry up here, and I can write it down into the liquidity, right? But if I back
all this does at this point is it just builds more, right? It just builds more liquidity in this area.
Exactly. And per my concept, per my system, I understand that if there is reactions in this blue box, in this area here, I understand it to be false, and it's going to be short-lived. It's just to induce buyers, to build liquidity at the lows. I will never trade, I will never look to take longs above the lows, only below. So again, in this example here, if now I want to look to take buys back up, I will have to look for buys below these lows. Okay. And then now this is simple liquidity stuff, right? Buy below lows, sell above highs. All right. Now what we were talking about before is sometimes now, if I can use your red marker, I'll mark on, so smart money concept or structure traders will look at this as like a BOS, right? So I can mark that on there, BOS. Perfect. Now the market, what tends to happen is as we trade back up to the upside, it'll create some sort of internal lows. Then finally, when we approach these areas again,
false reactions.
Exactly. So I understand that since we have taken out these lows, 1, 2, 3, retail looks at that as a momentum shift. So they're looking to sell up here. Perfect. So I understand that. The market tends to come up and respect these areas, again, to induce sellers, to build liquidity above these highs. If the reaction comes around, perfect. I'm looking to take a buy entry right here, and then all the way back up into the highs. Right? So it's rinse and repeat. I have to make sure I'm always targeting liquidity and taking an entry after liquidity is taken. Right? Because a lot of people make the mistake of, yes, you're looking for a buy below these lows, but what liquidity are you targeting? Right? There needs to be that logic that, there needs to be that logic involved for sure.
This is really actually, in a way, showcasing the fractal nature of this model and this way of thinking, because this essentially would be a bigger picture. In this case, we could say, 4 hour or 1 hour, let's say. And then this, so the actual trading side of that, this liquidity being swept to then target is actually then, say, a 15-minute happening here with your reactions, etc.
For sure.
For example.
I agree with you.
But again, it could be, daily and 4 hours.
100%.
Weekly.
The thing is, this whole scenario I've drawn on, I'm never trying to pit, like when I draw diagrams like this, I don't want it for people to view it as like a pattern, right? This is just strictly for understanding, because I don't want you guys to just print out this diagram, go to your chart, and just try to find this exact scenario, because it won't work like that. You need to understand what I'm trying to draw out here, and then obviously put that onto your own chart.
Context.
Exactly, for sure. And like you mentioned before, it's fractal, right? So this could happen on the daily. It could happen all the way down to the 1 minute, right?
What are your thoughts in terms of identifying liquidity? Because we've mentioned in terms of this low or this high, right? Or this high, sorry. And more so it's because we've had a potential structure made, the low then being the liquidity of that structure. Is that exactly how you're identifying it? Is there other areas that you would identify as well? Yeah.
So again, this is bringing me back to the beginning. When I'm talking about, I don't want to ever overcomplicate anything. A lot of people would like to look at this as, trend line, channel, whatever it is. But if you literally just understand this drawing right here, this part of the drawing right here, it's literally just this. That's it. So high taken, low respected, move away. So people can say channel, people can say trend line liquidity. At the end of the day, keep it simple, and it's literally just liquidity, period, right? Again, you can look at it as a Fibonacci retracement level, smart money concepts. I understand that if I see the market respect a high from A to B and move away, that tells me there's liquidity above that high, right? A lot of people like to say, okay, so this high is taken out, which now I can look for sells. But why? Was there liquidity above that high? Right? Most likely not, because it didn't respect it. Now we were now approached the low down here. If we respect it and move away, perfect. Simple stuff. There's liquidity below that low.
So this is really identifying where the resting liquidity is, rather than saying that, okay, let me keep trying to predict where liquidity could be formed. Is actually saying, okay, where is it currently?
Yeah. So this is bringing me back to my point. We were talking about earlier is the hard part, not necessarily the hard part, but the part a lot of people struggle with is the patience side of it, meaning you need to wait for liquidity to get built, right? If there is no liquidity on the chart, how am I supposed to build a direction? How am I supposed to build a bias, right? So that's where people struggle with the most, in my opinion, is just sitting on the hands and waiting for that liquidity to build. Once it's built in front of you, being able to build a direction and bias in the market, it becomes 10 times easier, right? Sometimes you see a big move in the market occur, right? And like, let's say this is only the hourly or the 4 hour. most likely I'm not trading this current chart for the next couple of days. Why? Because this big move has just occurred. And that means maybe you can go into the 1 minute and the 5 minute and try and find an entry. But on the current picture right here on the 1 hour and 4 hour, all I can mark on is we've taken out this high, period. I don't see any other liquidity. So why would I be trading?
So as an example of this, for example, we look at Euro. There's actually an interesting conversation we had because this move happened, this right here. We're talking in February time, right? February of 2025. So we're currently in April, towards the end of April. So this has happened. You can go back on the chart and see this. And maybe we can actually pull it up actually later. But we had a move exactly like this. And I was actually looking at Euro personally to try and get to that sort of 50% that balance out the range, right? But before that, all you had was this, right? And we were here and I was like, okay, this is where I wanted us to get to, me personally. And I remember you saying how this is really all you can see price taking out. Because below that point, there's no liquidity. There's no significant, even on the lower time frames, there weren't really any highs and lows.
100%.
But, you know, maybe if you go to the 1 minute, you'll see obviously something, but on any other really significant time frame, it was all just one direction. And that's where I think that term liquidity void comes in when we're talking fair value gaps and POIs, etc. Like there's one term liquidity void, and I like it because of that simple fact that that's what it's really showcasing is there's a void, a gap, a missing
gap in the
point.
liquidity.
Yeah,
I agree.
Where it's just been one directional. And then what ended up happening, and we'll pull this up on Euro later so you can see it, this price did come down, and that was great. But we swept liquidity, new highs after that.
Exactly. And then just like you marked out here, if we're now taking out this low over here, sellers are going to be looking to take entries where? Below this high, right? And that's going to be what I'm going to be viewing as what's called a trap.
Yeah.
Right.
And probably what happens is, and we'll check the chart, is we probably had a reaction.
Exactly.
And then continued up.
Exactly. And there's that continuation that comes through.
And then again, you know, one of the positives that we definitely highlighted here is because what happens to people is when they're in this moment, right? And we've seen this over these last few, you know, I'd say a couple months now, is when this happens, everyone gets confused. Everyone gets really confused. They're kind of lost. A lot of the time they're chasing the sell because they missed the buy.
Exactly.
Even though they want to buy overall. Right? They understand it's bullish, but overall they're like, okay, let me focus on selling because of course we can't just keep going higher.
Exactly.
The market can do anything.
Exactly.
But with this scenario, with liquidity as a focus point of a strategy, and even if let's say it's not a focus point of your strategy, because there'll be people listening who love the idea of this, but maybe they don't want to fully adapt, which is absolutely fine. But by understanding this concept, it really opens your eyes to the markets. I would say takes away a lot of that stress, a lot of that sort of unknown, because you just know, I just need to wait a few days, let liquidity build up, identify it, and then could be a case where you sit on your hands still, like in this case, where we're starting to identify these significant highs and lows now being formed. We know, because if you're trading from here, you know you can target this low. That's great. If, however, you don't feel comfortable, that's fine. You just know that if this low gets taken,
then you have the opportunity to buy. Exactly. And again, that's where the hardest part is. If I can mark this out, this move from A to B, from low to high, this is where a lot of traders screw up. They can't wait for this move to happen again from A to B. But if you learn how to sit on your hands, stay patient, wait for this false move to occur, you'll avoid a lot of losses, right? Because I've taught a lot of people where they'll be like, okay, well, cool, we have a liquidity at the lows here. Let me try and sell into it. But the problem is with that is if we're heavily bullish, then the price can just continuously leave lows to the downside, right? So the highest probability way of looking at this scenario right here is to wait again for this to form, this high to low, this trap move to the downside. And then again, you have the opportunity of riding this back up to the highs.
Let's take a break for a minute there, guys, because I want to tell you about our preferred prop firm here at Chart Fanatics, and it is Apex Trader Funding. We are no stranger to Apex. We've had JadeCap and Trader Kane on Words of Rizdom and here on Chart Fanatics. Now, they are well known for having record payouts on Apex of over $2 million a piece. Now, even if you don't achieve a 7-figure payout, the reality of achieving a multi-6-figure payout with Apex is absolutely achievable and an incredible opportunity at that. And you can see that on screen right now with all the incredible payouts being paid out to traders around the world, traders just like you. Now, Apex is the biggest futures firm in the entire industry and have paid out over $500 million to traders across the world. No matter the type of trader, you can be one of them too. Now, one of our favorite things about Apex is that you can get up to $6 million in funding using the 20 accounts that you're allowed to have and the 300K account at that totals $6 million. And another thing that we love about Apex is that there's no daily drawdown. It's a one-step evaluation and the fact that it's uncapped payouts. and 90% of the profits made are yours to keep. Now don't forget, regardless of the type of trader that you are, you do not have to worry about trading news as long as you are following your day-to-day trading strategy. The possibilities are limitless at Apex Trader Funding. Now, you can get up to 90% off. 90% off, the biggest discount in the entire industry at Apex using the code CF and the link in the description below. Thanks to them and thanks to Chart Fanatics. Make sure you get your futures funding with Apex. Now let's get back to the episode.
Is there anything we can draw out just to highlight the fractal nature? So, let's say we have someone who's a day trader or scalper, right? But how it can be helpful still to understand the bigger picture, say like a daily or weekly time frame, even though it's so far out, what that might look like. Let's say as an example, just to help you, sort of visualize, say, weeklies like this or dailies like this, and this is your liquidity. But on the shorter term time frame, you have something else that you could then target here.
For sure. I definitely, yeah, 100%. I can draw something up for you guys. Okay, cool. So again, it all comes down to liquidity. So
maybe do one side on like the higher time frame this side and lower time frame this side.
Perfect. Yeah. So I'll draw this out. Just like we've been talking about, high taken out, lows respected, and we move away again. We move away from low to high. That's the important part. So we have liquidity at this low, right? Perfect. Now, if I was to, let's do it like this. So price comes back down to this low. And now I'm going to draw the lower time frames. So let's just say in this scenario here, we're looking at H1, okay? Or even M15, whatever you want to use as like a scalper or intraday trader.
H1. I'm using my left hand. Apologies.
Okay. So we sell off from this high. So from up here, we move to the downside, okay? And we have liquidity down here. So we come down to the downside, and let's just say we get some highs and lows printed on. And we approach the lows. So now, look how price is approaching these lows down here. We're approaching the lows. All of a sudden, you get that move up to the downside. So this is what I was just talking about on your, to the upside. This is what we were just talking about in that Euro example. This is where a lot of traders, if I can use the screen market, this is where they make the mistake. They can't wait for this to occur. Okay. But if you learn to wait for this to occur, this false move to the upside, then you can now understand that we have just taken out sellers. Right? So we trapped sellers, meaning, look, again, same thing. High, respected high, high, respected high, moved away to the downside. So there's liquidity above that high. Simple stuff, right? And then from here, we get a false run to the upside. We take out that seller liquidity, and then that move occurs, right? So it's just basically like this, boom, and boom. So this would be the sell opportunity on the lower time frames using the higher time frames to aid that.
And just to showcase, really, because in this case, we're understanding what's happening between buyers and sellers. On this side, obviously, we're showing a higher time frame, but in essence, what could be happening is that could be a fair value gap there, right, which sits above these highs. And the only reason I'm highlighting this is that with this method, there's nothing wrong with it. What works, whatever resonates with you is very important. But what I find with this side, when it comes to, say, SMC, ICT concepts, or just generally as well, like retail concepts, is a lot of complexities and a lot still of like unknown, right?
For sure.
Yes, I would argue that ICT concept, SMC, do try and tell a story. But one thing I've always found with this style, where you're really focused on one thing, which is liquidity, it tells all of that story, but just in a much clearer fashion, in my opinion.
Yes, yeah.
Right? Because I know that you transitioned from more that SMC style before.
Yeah, for sure. Yeah.
And then once you really decided to focus on liquidity, and it spent time as well. I know you put in countless chart time to really develop and build your eye for this. And I think that's something that can't be avoided, right? I think you have to. But one thing I just want to ask about this here is, as you said, like a lot of people are too impatient for this move.
Of course.
But equally, would you say two things that can be very strong reality for people? And what would you say? Is this something that you sort of face? And if so, like, what did you do? Is like, you're looking too long anyway, right? But you see price start to move before, and you start to assume, well, it's going to go without me. Let me jump in. Right? So you jump in here, let's say. Price then takes out that high, it comes back down. And now you're seeing those profits come back down as well, but you think still, bullish. And then you kind of start to forget your original plan, and you start to buy in some more here, thinking, okay, let me get in better price. And then it continues down.
And then you're stopped out, right? So this is a very, again, a common mistake, and it can be fixed with one strict rule. Literally this. Use the red marker for this. So a strict rule for myself is, if we ever are moving to the downside like this, and I'm looking for a whole buy scenario to play out. If we get a move to the upside and we take out highs, I will not buy this asset pair, whatever I'm trading, until this low is taken out right here. So it doesn't matter what happens anywhere between. Sometimes what occurs is the market will come down to the downside and then just go long. It doesn't matter. This is not a move I was supposed to be in. Okay. So it's exactly. It's a very strict rule. Literally, if the market does not run this low, I will not involve myself. Same thing, when going to the, downside. If we are moving to the upside like this and market comes down, I will not look to take a sell until this high right here is taken out. Right. So boom, boom, boom. Now I can look to sell.
And do you find that if this happens, let's say this scenario where it does go without you and it hasn't really met your model yet, eventually would you say from memory or experience that this does end up getting taken out eventually anyway?
That was just going to be to my next topic I wanted to talk about. This is now going to be a future target. So this type of price action we just drew out typically occurs.
Let's draw it again.
Exactly. Yeah, let's talk about it. So market sells off like this, reacts to an area on the left-hand side. We get a move up, right? Again, I'm not looking to take an entry until this low is taken. Okay. And again, what happens sometimes is the market will just do this, respect the low, and move away. This whole scenario, this whole scenario right in front of us typically occurs. Maybe if there is news on a Wednesday, this could occur on like Tuesday. Why? It's just built liquidity for news the following day. So yes, almost always I can tell you guys that if we have left liquidity like this, it's going to be either a future target you can sell into or another buy opportunity somewhere down the line. Maybe it's the next day or even the next week. We end up running these lows and then you can look for that buy back up.
So it's just accepting, like with pretty much every strategy, that there's going to be trades that don't play out. There's going to be trades that you have to wait for.
Yep.
Which is always interesting, right? Because I see why it's so easy to sort of get drawn into the market.
Of course.
Because you plan a trade and you sit there and plan and wait, but then at the end of the day, it doesn't play out for you exactly how you want it. So that's just the reality of these markets. It cannot be avoided. In terms of internal, external liquidity, I guess that's kind of what we just talked about from the higher time frame perspective to lower time frame. Is there any sort of nuance or any sort of things that you focus on though when comparing the two?
External and internal?
Yeah, meaning so like you got the outside of the range versus the inside. As I said, like we kind of went over it because a lot of the time the outside is the higher time frame areas and then the inside is normally the lower time frame. Is there anything that like stands out to you as like more high probable or something you focus on at all between those two? Not comparing the two, but if there's anything that...
Usually, and we'll use a diagram as an example. Markets left liquidity at the highs for me. If I'm looking for a buy opportunity in this scenario right here, understanding that there's liquidity at this high, I want to target it. Typically what happens is this is known as your external, right? The top of the range. And here you have your bottom of the range. And on the way up, price will usually, not all the time, but form some sort of internal. Okay. Usually I'm taking entries off internal liquidity gain taken. So if we get that false reaction down here, I'm taking an entry down here and I'm targeting external. So that's how I use it. And then if I'm looking for sometimes after this high gets taken out, again, it all depends what the higher time frame is saying. Typically, once external's taken, there's reversals that occur, right? And then you'll have the sell off. Why? Because there's liquidity built here, right? So usually, again, reversals occur once external's taken out. I'm taking entries from internal, targeting external.
That's the main focus. In terms of execution then, so how are you going about, like what is your mindset behind sort of the execution process? So once that's happened, this model we just looked at, how are you looking to execute off the back of that?
One simple way I use for entries is I need to understand which highs and lows don't have liquidity yet, basically. Meaning, if we have swept out this high, okay, and moved to the downside, why would there be any liquidity above this high right here? There wouldn't be, right? All we've now done is literally just ran this high to the upside. Price has not approached the high and moved away yet, meaning there shouldn't be any liquidity above this high. Obviously, nothing's 100%, but this is just a simple concept I apply to my model. Me understanding that liquidity has been taken out here.
And that's saying basically, let's say, directly to the left, there's nothing there either.
Exactly.
You know, it could be like years ago.
Yes.
Yeah, but that's not as important. But really, this is saying that we've just reached this high.
Yes.
To the left is down here, right?
Yes. And let's just say I'm looking to take some sort of sell entry. I need to see this occur. I need to see some sort of liquidity taken out. Okay. This high print, and we move away, meaning there should not be any liquidity above this high, which means I'm looking to take entries in here somewhere. Okay. Sell entries up here, and I'm targeting whatever sort of liquidity we have to the downside. Okay. But again, I keep it as simple as possible. I'm looking to take sells at highs. I'm analyzing as no liquidity above them.
And but how do you do about executing them? So in terms of like, what do you see when it comes to execution? Do you have like one execution model? Or do you have like multiple? Or how does that look in terms of, so if we were to take this area here, so you've had the reaction, what are you then looking for?
Within this high right here.
Yeah.
Okay.
So how do you go about executing your trade?
Same thing. I'd want to see. So we're tapping into the area on the left hand side. We move away. We build liquidity. I'm taking the sell up here, again off this area up here, and target to the downside. So the same thing. I need to see the buildup occur. This whole scenario play out. Same thing that's happening on the higher time frames is happening on the lower time frames.
So would you just execute once the high is taken? Or?
Exactly. Once this high is taken, exactly. That's why I'm taking a sell entry, and I'm always going to be covering the high I have to the left hand side. So in this example here, if I'm just taking a direct entry off here, stop loss above that high.
Okay. So in this case, stop loss would be above this high.
Exactly.
Your execution would come off a more fractal sort of confirmation.
Exactly.
Of using the same mindset, same model.
Yep.
Understanding your bigger picture as well. So then you know where you're targeting already. And then from there, you're executing once the high is taken, stop loss above.
Yes. And obviously, again, this is where people make mistakes. I'm not a pattern trader, so I need to make sure there's logic. I need to make sure I'm targeting liquidity, right? Not just a random low to the downside. I need to understand that if there's liquidity to the downside, that's going to be my target.
Definitely. No, I love that. So like we talked about execution there and stop loss placement. Like what about in terms of your management of trades? Are you looking to leave them to run, so leave just set your trade and then forget it, or how are you going break even? Are you taking partials? Like what does that look like?
Cool. I'll just use the same diagram. This is as easy as possible to always go through. So liquidity left at the highs. Again, buy scenario for myself. I understand internal has been built for myself to use as an entry. Okay. Market comes up to the upside, respects the highs. Okay, so now I'm looking to take my buy down here. So as for trade management, again, in this scenario, stop loss below this low. Stop loss would be down here. And obviously, I'm going to be looking to target the highs. Something I don't do too often is take partials. I'm not the biggest fan of taking partials. So in this specific scenario right now, if I'm looking to take entries down here, once price, sometimes we get a reaction up, maybe once move down further, that's fine. And then we start moving to the upside. Once I start getting this move up, I'll look to trail my stop below this low. Essentially, what I'm predicting is this low should not be revisited. Okay, so it's going to be left for the future. So again, I'll trail my stop below this low. So now essentially I've cut my risk almost in half from this original stop loss placement.
Yeah.
I roll it below here and I let the trade do its thing. I'm not the biggest fan of setting my trade to break even unless I've partialed or like closed majority out. And then sure, I'll let it ride BE and I'll hold to further targets. So again, I'll roll my stop right here. I'll let the trade play out, and then I'll be looking to target this high, and then finally this high on the left-hand side. Okay, but I'm not going to be looking to close partials at like an internal point over here. I'm not looking to close that at a specific R. That's something I've never really understood that, to be honest with you. A lot of people like to say, I'll take a partial at 1 to 3 or 1 to 5. I always ask myself, why? Why are you analyzing the chart at all if you're looking to partial at a random RR point, right? It's literally just a random point in the chart. Sometimes it'll match up with a high or a low. Sometimes it won't. My point being is it's completely random all the time. So if I'm analyzing the chart, looking to see where price is heading to next, I'm going to be targeting these areas.
Yeah.
That's the whole point of analyzing the chart in the first place. In my opinion, of course, everybody's different, but that's just how I view it.
No, I love that. Is there anything before we go pros and cons you think that we need to cover?
I think we've covered some cons.
So we'll do pros and cons then on the strategy, because I'm excited to get into the charts on this one. When we say cons, as always, it's not this is bad. It's more so that this is something to be mindful of, something that could be a challenge, something that could be a hurdle. It could be bad as well. I don't know.
For sure.
In terms of cons, I would say is something you have to get used to, right? So it's not really a con again. It's more so like something you need to be aware of. It's something like you have to train your eyes.
Yeah, it's different. It's different for a lot of people. It's not really, to be honest with you, I don't really see a lot of people in the industry trading how I trade. Not to toot my own horn, but it's just a different way of viewing the market.
Yeah.
So yeah, you just have to get used to it.
Yeah.
Kind of like an unlearn to relearn kind of thing.
Yeah. I think chart time, I think if you're not careful, and this isn't really the strategy, it's more trader, so something to be aware of, is you require a lot of patience.
I agree.
You know, and you have to control yourself, which I guess is every strategy. But we'll add it here anyway, just because it's easy to sort of plan your trade out, start to move without you, and so on. Like, you have to have control of yourself. Again, I would say that's for every strategy. No, so it's not really specific to this one. But I think the patience one is very important, as you mentioned. Like, unless that high or low gets taken, you're not really doing anything.
Exactly.
And I think in the early days, no doubt, it's easy to kind of do something.
For sure.
Would you say it's important to, when using the strategy, it's not necessary, but it's probably helpful to use multiple assets?
I always recommend for the traders in the learning stages, I would cap myself out at about 2-3 pairs on my watch list. To be honest with you, even with this system, how I trade, you're still going to find plenty of opportunity on a weekly basis.
Exactly, yeah. It was more so just so that if, let's say, for any reason one has moved and hasn't really, it's very far away from a liquidity point, for example, at least you have other options.
For sure.
But it's good to know that it works on other assets. So that can be on the pros side for sure, in terms of Fractal, in terms of very clear understanding of what's going on in the market. Do you want to do that side?
Yeah, for sure. Let's do that.
So we have like the fractal nature of the strategy and the model, with a very clear understanding.
So fractal nature, clear understanding.
Yeah. Very, very clear, simple rules as well, I'd say.
This is, again, an important part, especially for this strategy, is understanding you need to have proper rules in place. So like you mentioned before, I won't be buying unless these lows are taken. I won't be selling until these highs are taken, period, right? No ifs, ands, or buts. So we can write clear understanding, strict rules.
What else have we got for pros? Let's see. Strict rules. Oh, simple, for sure.
Simplicity.
I would say so. It's interesting simple though, because yes, it is very simple. Yeah, it's one concept essentially. And it's essentially drawing lines on the chart, right? To mark out those liquidity highs and lows. However, as we talked about, it's complex in a way because it's not even complex. I don't know what the right terminology would be. You're essentially stripping back everything you've learned, things like, your break of structures and so on, because that's going to work against you when looking purely.
Yeah. And that, like we spoke about earlier in the video, it's like you need to almost have a decent understanding of these retail concepts, because I need to understand them because they aid me in understanding where the liquidity is.
Yeah.
Right. So yes, unlearn to relearn, but you have to understand that you're trading two different ways.
Yeah.
You're letting retail trade, and then literally once they get trapped, that's when you're taking advantage.
Have you seen anyone use these concepts while still sort of implementing other ones, or have you found that really to use them wisely and properly and effectively, you really just have to kind of go all in with just focusing on liquidity?
The foundation of it, I've seen a lot of people use, or even people I've taught and trained in the past, use the foundation of it. And of course, everyone will maybe have their own spin on it. Maybe there's a specific pattern or entry model they'll use, or they'll manage their trade differently than me. I usually teach that I like to hold to targets, but again, everybody's different, right? So some people may partial earlier than me,
of course.
But I believe the foundation is there still. That's the important part.
Yeah, we're good.
Perfect.
Cool. Let's pull out the charts. I'm excited for this.
Yes, sir.
So we have the chart out now. We're going to go over some trade examples of the exact strategy that we just went over there on the whiteboard. I'm excited. I'm really excited for this. It was clear on the whiteboard. Drop a comment with what you think so far. Is it clear? Is there any questions you have? Drop them in the comments. Make sure you hit subscribe as always. But let's get into this straight away. So what we have futures up here, right?
Yeah. So this is the futures market. This is the Dow Jones. So YM. A beautiful sell opportunity. This was quite recent, honestly. I think it was last week or the week before. But this is going to be an example of a pitch perfect sell scenario I like to look at. But yeah, we are on we'll go to the 30-minute here to start off. And just to identify, I'll zoom out. You guys can get an idea of where we are right now. This is going to be the area we want to be focusing on. Okay. So if we want to just have a clear and precise mark right now, we can mark on right away that we have a level of equal lows, relative equal lows. Nonetheless, very simple stuff. It's an area of liquidity, okay? Which tells me I want to be looking for sells into here. It doesn't mean these lows are going to get taken right away, but it's an area to look for if I am scoping out a sell scenario, right? So simply marked out these lows, drag it out to the right-hand side. Perfect. Now, if I zoom into current price action, again, this is where we're going to be looking at. This trade occurred in the heart of New York session. So this is about an hour and a half-ish after the open. So I'm always trading with New York time. So stock open is 9:30 a.m. for me. But yeah, perfect. So on the 30-minute, we're going to hop into the 5-minute chart. This is usually the time frame I'm hanging out on. Kind of a do-it-all time frame for me, to be honest. Cool. So zoom into current PA here, and cool. We'll start identifying and marking out everything. So as we know, stock open is 9:30, which is right here. That is not what I wanted to do. All right, so stock open is right here at 9:30 a.m. I just want to mark this on because I understand this is a important level of time. Okay, especially for the futures market. This is when stocks open up and has a direct correlation with the indexes. So I have what's marked on. Typically, I'm looking for entries after the open. So as you can see, before the open, this was in London, we had this bullish move to the upside. Okay, so if I can mark this out, you can see how we stabbed out previous lows here. Okay, from there, we've went bullish. All right. Now, what can I notice and identify is we have taken out this high. So why is that important for me? This is now going to be an area I'm going to be looking at as a trap. Why? Because if retail is looking to take this thing long, they have now seen a BOS here. So we can mark that on. They want to be looking to take longs in and around this red box, just like we were talking about on the whiteboard, right? So we get this bullish move up. You can see how we have spiked out all of Asia liquidity.
Yeah, I was going to ask, is that Asia? Is that the Asia?
Yes, exactly. So this is Asia high and Asia low, just the purple box, just to make it nice and clear and easy. So again, we get this bullish move to the upside. So something I want to point out here, it's what we talked about before. We have spiked out this low, right, and ran bullish, telling me there shouldn't be any liquidity below this low right now. So this reaction that we're going to go and talk about soon is possible. Why? Again, we have spiked out liquidity. There shouldn't be any liquidity below this low right now. So again, this bullish move occurs to the upside. BOS induces buyers, spiked out Asia liquidity. Perfect. Look how at the very top of the swing point here, we have spiked out a high, which now tells me there shouldn't be any liquidity above this high. Perfect. Now from there, we sell off to the downside. Now look how we kind of chop around. This usually happens right before New York open. Okay. It's kind of building liquidity for New York to deal with in the future. So we chop around for a bit. We leave these equal highs. Okay. Structural point, however you want to call it. Again, we can simplify it as much as possible. You can see how price has stabbed out the low we've just marked out, returned back to the high. So this is going to be an area sellers are looking to take entries from, right? Just like we spoke about before, high respects high. And then we sell off to the downside. Perfect. From there, we respected the low. Why? This is because buyers were induced once we had this BOS in the market. So they're looking to take entries down here. This is all happening. Again, look at the time. This is right after stock open. Yeah. So stock open opens up, sell off to the downside. Buyers are entering positions here. So again, we get that move away, which is what I want to see. Okay. I want to see this area respected and I want to see the move away occur, which now tells me we have liquidity below this low. Now I can look to target this, right? Perfect. Now, if I drag this high, move it across, look what happens here. This bullish move that occurs from the lows came up to sweep these internal highs that we built right before New York open. And it's a big surprise. We respect this high. Why? There was no liquidity above this high. So of course, now, since we've respected it, there's going to be liquidity up here now. Okay. But in this time, in live price, we've spiked out these internal highs. This is where I'm looking to take my sell entry there. Yeah. Right there. And again, where I'm going to be targeting, simple stuff, liquidity, right? We've engineered liquidity at the lows. That's where I'm going to be targeting.
So what do you do in terms of execution there? Are you looking to just have a sort of a limit or stop order at that sort of level? So then stop loss above the high overall to the left.
Yeah, so I personally don't use limits too much. I like to market execute. It's just what I'm comfortable with. To be honest with you, futures you can, obviously with no spread and stuff, so you can set your limits anywhere and you'll get filled wherever you set them. I came from a Forex background. I'm transitioned into futures. So Forex, you have spread. Limits don't get tagged sometimes. So I always wanted to avoid that.
Yeah.
So it's just something that's stuck with me. I just market execute. So in this example here, just how I draw the sell tool on, I'll have my entry, I'll take it as soon as the high is spiked out, just like this.
Okay, got you.
Okay. And again, you can close out full here. You can partial, but don't forget about the higher time frame, which basically gave us our bias in the first, in the beginning of the video. This is going to be my overall target, right? How I would manage this accordingly would mean I would partial here.
Yep.
Okay. Usually 50%, maybe 70% if I'm very confident in the higher time frame. And then I'd hold the rest of the position to the further target, of course. But again, just like I was speaking about on the whiteboard, I'm not the type of person to close out partials like at this low or at this low.
Yeah.
No, the whole reason, this whole picture in front of us right here is these lows. These lows are telling me, buyers have entered positions down here. So I want to be targeting that liquidity, right?
Exactly. So like, it's almost suffocating your trade. I think that's the common trait of someone who's probably not trading a plan or has gone off plan when they are getting into the right trade, but then cutting it too early.
Exactly.
Getting out here, as you mentioned. And I think partially it could come into what we talked about earlier, which is you mark out this low, but then you see price do this explosive move. You then see it come back and you think, I need to go long here. So they get in long, they go higher. They may even close out the long here, look to go short, but then they still think it's long. So they start cutting that short ASAP versus the actual trade being, as you said, patience being necessary. Funny thing is, patience is really, if you decided to come to your chart super early, or trade London and Frankfurt session, let's say, when it's not part of your plan, let's say, if you focus on your timing, as you said, like, here's your New York Open.
Yep.
You're really looking at what's happening thereafter. Then you won't have to worry about all this mess.
Exactly.
And you won't have to worry probably about conflicting biases at that point. Because I think a large part of the problem that people have is the fact that they sit and wait at the chart. I know it's happened to me so many times.
Yep.
So therefore you start looking for what's happening now.
Yep.
Versus you might have actually just created a nice bias on the Sunday or, for the day before, for the next day, where you've objectively done it, you've taken your time and you've actually made a good bias. But then you've sat there for the next morning for 4 or 5 hours watching the 5-minute chart, and you've convinced yourself.
That's where a lot of people screw up, in my opinion. For myself, what's helped me a lot is I have a specific time window, a specific time of the day I like to trade. And this is very overlooked in my opinion, but I have a specific time window, and I trade only that. What people need to understand is what happens outside of the time window is completely irrelevant to me. It doesn't bother me. Sure, I can wake up in the morning and be like, London had a nice move. It doesn't matter though, right? That's not my time window. It's not in my plan. It's not in my rules. So why do I have to care about that? I care what's happening in my session, right? In my timing window.
This is a phenomenal trade there. Even just to the low there.
Beautiful. This is very textbook, honestly.
3.6 in terms of risk to reward, which is really great. And that's a slightly higher, stop loss potentially because of that wick up to the left. But regardless, 1 to 3.6, sorry, just to the low, let alone to your higher time frame target that does come through with a 1 to 10.
Yeah.
And it's not even about the risk to reward, as you mentioned earlier. It's more so about the model.
Yes.
It's more so about the understanding of liquidity. And this really showcases not only your lower time frame in terms of execution and target and what's happening, but then also why that higher time frame targeting makes sense.
Exactly.
It's very important because what happened, I don't know if this was part of the plan, but like what happened next, because we actually had one more day before we hit the target. Is there anything that's pops out to you for your model? Maybe it doesn't, but for your model that makes sense for that move?
Very simple stuff for me here is I've understood, I've viewed this as liquidity, right? I've identified this level as liquidity, these equal lows here. And you can see how price has respected it here. Okay. But I understand that if there's going to be reactions, most likely going to be false. Okay. And again, that's per my system, right? You can see once we respect it, any buyers looking to take positions here, look what happens here. They get another BOS in the market. Okay. So where will they look to take entries from? Any pullback traders, maybe down here at these levels down here, or they have the extreme. Look, there's imbalances down here. So both these red boxes I'm viewing as a trap. This move this move from A to B, low to high, has been occurred to induce buyers, right? Now we have even more liquidity below this low and overall below these lows as well.
Amazing.
Yeah, nice and simple, honestly. This is a textbook trade for sure.
No, phenomenal, honestly. You know, I always, this is the reason why I wanted you to come on to Chart Fanatics, for this very reason, simply because, you know, I watched you develop this strategy over a long period of time. Just putting in the chart hours, you know, most of all. And ever since then, really have such a deep level understanding of chart. Like, you could pull up at any chart and just start to mark out, here's where our liquidity is. It's not even about trading. That's the thing. It's not about trading every chart. It's just about being able to actually identify, as you said at the very, very beginning, direction.
Yep.
You know, once you have that direction down, even if you don't manage to get into a trade, it's only an eventuality that you will eventually get into a trade.
For
Even
sure.
If, let's say you know, don't know how to execute for 6 months. If you have the direction down, you're going to make money eventually.
Yeah, that's something. And maybe people view my strategy as kind of like too precise, which is normal in the beginning parts, because yes, it is very precise. But something I teach to my own students as well is you don't need the very top to catch that sell. You don't need the very bottom to catch that buy, right? Like you were just talking about, the direction and the bias is the most important part. That's what pays the profits, right? At the end of the day, if you pull up your phone, your MetaTrader, whatever you use to trade, and you see the red and blue numbers, it doesn't show you your entry, right? MetaTrader doesn't care about how pretty your entry is. If you caught the very top or the very bottom, profit is profit, loss is loss.
There was a little phase a few years ago, wasn't there? It was like everyone was trying to get sniper entry.
For sure. And there's always another concept coming out, right?
Yeah. I'm waiting for the next one.
Oh yeah.
This will be it.
It's going to be around the corner. Oh yeah.
This will be it. That's it.
Don't leak.
Why don't we, I know you have 2 more examples already to go over, but why don't we just quickly, if possible, just look at that EU? It wasn't really, not from a trading perspective necessarily, but more so just like, I remember our conversation, and I remember when you said it to me, remember what my reply was? Like, that makes sense. I don't want it to be true because it goes against what I said. You know?
I believe
it worked out.
Yeah.
It was right there.
I know exactly what you're talking about. So just like
Let's go higher time frame quickly, just like daily, weekly, just to showcase what we were talking about with the large move here. So it's this large move here to the left that happened in March.
So it's right here. From
exactly, yeah.
Low to high.
So at that point, you know, a lot of people have missed. I know a couple people who were positioned well for that. This was a plan. That was my original plan, was for the long. I just was like going between challenge accounts at the time, etc. But regardless, it played out phenomenal. Now, what's annoying though for me, and I'm sure loads of people out there, they were planning the long. And yet we were ranging for months, like, you know, a good 4 or 5 months there.
Down here.
And overall, this whole long thesis for me anyway was from a weekly, monthly range of years, right? So we're at the low of that range.
Yep.
And therefore looking to go back to the high of the range or the medium, whatever.
And that came quite quick now, over the course of 6-7 weeks now.
Exactly, yeah, exactly. But you know, you miss the low, you get frustrated, you think, okay, so that's why therefore I was looking at shorts at the highs there, to get to the 50% to then buy.
Yeah.
Right, to get a really good buy position.
Yeah.
And you know, there's reasons to make sense of it. You know, Fibonacci, let's say 50% of the range. Let's say these order blocks / fair value gaps at the lows there, the previous resistance being
imbalance down here, 50% over here.
So many reasons to hope that price goes there. That's the big word, hope that price goes there. Because again, all those things, they're great tools, they're great strategies, they work. However, the one thing I've always loved about the liquidity aspect is that it tells you it's a lot clearer, right? We can't sit there and say there's 100% orders there from a CFD perspective. On futures, we could actually go and look at the tape and level 2 data, etc. And you probably find that they are there, right? That's why we're seeing the reactions. But what I'm getting at though is it allows you to tell a story. Their story.
There's more of a why behind it. But like you said, nothing's 100%, and that's not what I'm trying to teach or preach here, right? Nothing's 100%, but this kind of gives me more of a confident why to these moves that occur, which just, it's more of like a peace of mind and almost like an enjoyment as well. Exactly. It's even when I'm not in a really like a trade, the YM example I just showed you guys, many people I know caught it. I wasn't on the chart that day. But even seeing it play out, like it's beautiful to see in my opinion. So
well, let's take a look at, go lower with this one and let's just see that example you marked out, you know, to me.
Going the 4 hour here. So I know exactly what you're talking about right here. So just like we were talking about on the whiteboard, we had this liquidity buildup occur. And this happened over the course of Thursday so this was about 2 weeks of price action. Okay. So this is the 4 hour. So this is when things get difficult sometimes. We've had this big bullish move that we were just talking about on the higher time frames occur. And then for like a week and a half, 10 trading days, we, ranged, right? And we ranged quite heavily. And this is where people screw up. This is where people make mistakes. It's in this type of price action in here. Okay. If you learn how to stay out of price action like this, it'll avoid you a lot of losses, a lot of capital preservation. But I remember you messaged me, and I believe we were up here or maybe even in here somewhere. And you just asked me what I think about Euro. And I said, I don't know where it could be going in this current moment in here.
Yeah.
But if I was looking to take buys, it would only be below here. Right. And that makes my life so easy, because even if we didn't take out this low, it's not a move my system would have allowed me to be in.
Yeah.
Okay. For the most part, these lows do go. But again, nothing's ever 100%. The simplicity about this example is if these lows if they got ran, cool. There's now a buy opportunity in front of us.
Why was that though? Why was it that low in particular? Why not the low down there? Why not further down?
Yeah. So,
because that was the big reasoning, right? In terms of like when you said it, I was like, that makes sense.
it's very simple here. And we spoke about before, high taken out, price gives that pullback into this extreme level, okay? And then from here, we go bullish to the upside, okay? So essentially, this low has respected this low.
Yes.
Okay? So there's now liquidity below these lows. And then again, price takes out this high, comes back down to this low, okay, and respects it again and moves away. That's fine. I still understand there's going to be liquidity below this low, and that's what I need to get taken out. Okay, you can see how there's imbalances below, but overall, like if you keep scrolling down, the next internal low is going to be all the way down here.
Yeah, and there's a huge gap in between.
Exactly.
So really, I guess it's a combination of things, right? It's one, understanding that there's so much momentum, bullish momentum that's taken place. That momentum's still there.
Yeah.
Because we haven't seen anything drastic to pull us back down. So that means that momentum's still there. That means really on a higher time frame, if you want to talk about structure, it's still bullish, right? So following that same narrative, now you identify the liquidity point. At least that's, immediate, that really, there isn't really much below that, right? Which I think is an important point. There wasn't much liquidity below that point to be taken out. The only way really you're going to get there is if you then start engineering for a long portion of time, and you're probably going to need something that drives that sort of momentum in, right? Instead, you have that liquidity point, and again, it doesn't mean you trade it, right? You then look for your confirmation. So in this case, actually, if we take a look, just from this time frame, without going lower, without really dissecting it too much, and from my understanding, just from our session here today, I would say that you have this high that then led to obviously a new low. Price came up, gave a false reaction, which then on the back of the fact that we have the bullish momentum already, we've taken out liquidity on the lows. I'm then looking for longs as well. I would then look to long in this sort of area here.
Exactly. Yeah. And then the important part, just like you stated before, is this high respected this high on the left-hand side. Right. And then if you look right above, this price action right here, I'm circling right now, is literally just this. Low, high, low to the downside. That's structural liquidity. And I understand that any reactions below that, so any reactions below this high should be false. Right? And look how price even respects it. Right. So maybe another buy opportunity down here or down here.
Then look here as well. I'm sure there's probably some sort of news catalyst going on along these sort of wicks.
This was that Trump after. I remember that there was a news in FOMC. I believe it was late afternoon in New York. Late your time, but yeah, there was some wild spikiness.
But it's interesting though where it's positioned, where it's happened, because as you can see here, you see this wick actually went lower, which means it was a break of structure on a lower time frame.
Exactly.
But see what happened first. We came up, swept out some more liquidity to the left, brought in buyers, took those buyers out, and then we went
and
long,
then the move occurred.
Right?
So
but we only took the buyers out on a more internal perspective.
Exactly.
Because the overall perspective, low to high, is still intact.
Of course.
Right? And then we actually go and make a new high. And no doubt, even just on this price action, we can see similar before we made a new high. Right? Which is so interesting. Right? So interesting. I love it. Cool. A little detour onto EU there. I appreciate that. But I think that should open a lot of people's eyes, because I know a lot of people, even probably still now, are confused with EU's movements, etc. But especially then, at that point. And especially because I experienced it myself of, oh yeah, I'm looking short. I had reasons for short, but they weren't reasons based on like a actual logical. It's logical in the sense that, okay, these patterns and these tools we use, they make sense.
For sure.
Resistance was broken, retest of support. That's logical. Cool. We have Fibonacci, pullback. cool. Or, you know, discount of the range, cool. You know, all of those things make sense.
Yeah.
But it's not based on like, where are the orders?
Exactly.
Right?
Yeah.
And I think once you really start to pivot your thinking that way, it's helpful because at least even me being wrong, I already knew, more so because of our conversation, but also I try and think in that way as well, is I knew that, okay, this is probably why this is taking place, right? We have a lack of liquidity. Liquidity has actually been swept now. So it makes sense for us to be able to have a reaction to the upside,
Exactly.
which we then got. So yeah.
Perfect.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool in the entire trading industry. TradeZeller allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZeller, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZeller and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZeller, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on TradeZeller right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZeller. The links for TradeZeller are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
What do we have next? We have NQ, is it?
Cool. So yeah, we're going to hop into an NQ chart. This is an example on mid-April time. So again, this one's more recent as well. Just got to look. Okay, cool. So this is, we'll start again on the more higher time frame perspective, 30-minute, 15-minute.
Do you by any chance use cross-correlating correlating markets? Or do you purely focus on?
I don't. So whatever chart is in front of me is the chart I'm trading. So I believe, I've never really looked into it, but there's a smart money or SMTs.
Divergence.
Divergence. A lot of people look at stuff like that. I have never personally used it. No harm against it, but it's just nothing I've really come across that I enjoy too much. Literally, I like to keep it as simple as possible. Whatever is on the chart in front of me is the chart I'm going to be trading, right? It's all I need. Exactly. So hopping on NQ here, go on to the 15 minutes. So we had a nice sell off to the downside, right? Looking to the left-hand side, I can mark out this is the start of an imbalance. If you go to the lower time frames, which we're going to do, all this is going to be an internal low point, okay? And then you have that massive inefficiency right below. Cool. So go into the 5-minute chart here. Perfect. So just like I was talking about here, you can see how these are just literally all internal highs. Or sorry, these are all internal lows left, okay? And all the way down here, literally same thing over and over. It is just structural liquidity left. Okay? Maybe on a lower time frame, that's fine. But to keep it as simple as possible, this is all structural liquidity. And then again, you have this whole inefficiency down below, okay? Now going to more current price action, we'll mark out the stock open price or stock open time just to keep everything as simple as possible. Perfect. So this all happened in London. So in London, we printed this low. Okay. And if you look right above, we've left these internal highs. So the market ends up running for it right before New York opened here. Okay. And in current PA, we've swept that high. Okay. Like we were talking about before, why is this important? I'm now viewing this high as a level that does not have liquidity. Okay. So that's going to be of importance later on. Perfect. You can see from here, we sold off. Okay. Look to the left-hand side, lots of internal liquidity left here. All right. And the market respects it for a little bit, kind of chops around again. This is just how we were talking about on YM before. Before New York, you typically get this kind of price action, especially on indexes. And then we get the sell off to the downside. Perfect. So just to summarize everything that's going on right now, high taken, which tells me I do not want to be buying unless this close taken. This is if I'm buying this thing. overall, I understand that since the high is taken, buyers are induced. So any reactions at the low tell me that buyers are not entering the market. And if there is a reaction, it's going to be false.
Yeah.
Okay. And it's literally just engineering liquidity for me to target. All right. Perfect. Now I'm going to have to go into the 1 minute here. I'm not typically on the 1 minute too much. But nonetheless, it is all the same, to be honest with you. Just more opportunity on M1, but also more opportunity to get slapped up, right? So move this over to the left-hand side. So again, look at all this internal price action here. Simple stuff. High taken, low respected. We move away. So there's liquidity here. Same thing over here. Finally, there's a little imbalance. But overall, there's all internal liquidity points that I eventually want to see get taken.
Okay.
So New York Open occurs, and this spike came off the back of news. Just like stock open, I'll never enter before news. Of course, I want to wait for the news to get released, and I'm entering after. Usually, typically 2 minutes, 3 minutes, 4 minutes, somewhere in that range. But you can see here, 8:30 a.m., New York had some sort of red folder news event, which caused this spike up. Okay. Where did it spike to? Well, in early New York, just before New York Open, actually, we've taken out this low. So why is that important to me? This is important because it's induced sellers in the market, meaning they're going to be looking to take sells below this high. Okay. And of course you have these imbalances up here, maybe anywhere up there as well. But overall, I don't want to be looking at
and the orders are going to
yes. And this comes back to having this strict rule in place. I will not sell unless this high is taken out. Okay. And if you look to the left-hand side, this high, right, swept this level of liquidity, leaving this whole area. This is now an area I'm essentially looking to take an entry off of, right? I don't like to refine it too much. Sure, you could look for an imbalance in these areas here. It's unnecessary in my opinion. I will always
more bothered about this area getting taken out.
Exactly. As soon as this high is taken out, my stop covers this high on the left-hand side.
With the futures side, are you confident due to the lack of spread, etc., and centralization when it comes to the order books? Are you confident in just having literally a stop directly above that high versus when you were trading Forex before? Did you have to give some buffer? And
yeah, the thing about Forex is you're going to have to keep it well above or well below, depending if you're buying or selling, of course, because of spread, because there's different feeds, there's a little bit of manipulation, right? But however, on these charts, everyone's trading from one feed, right? One chart. So yes, I do keep mine literally like a tick or two above the high because it's just how my system is, right? I don't want to see price above this high. So
well, that's the beauty of the futures.
Exactly.
You're able to do that confidently without
100%, 100%. So again, stop covers this high always. I don't want to get greedy and get too low, always above the high. And again, entry as soon as this high is taken out. So that level of liquidity is taken out. And simple things, I'm targeting opposing liquidity. So just like in the NQ example, in the YM example, you can partial down at these lows where the buyers are going to be getting trapped from. And then, of course, you have further targets on the higher time frames you can target as well, right? So as you guys can probably notice now, there's usually more of like a lower time frame target I'm using to partial at possibly. And then you'll have your more higher time frame target you can finish the whole trade at.
Yeah. No, I love that.
Nice and simple again. Yeah, this is a great example as well.
This one is, as you say, it's a great example, but it does show like the not complexity, but it shows how it's not like copy and paste. Like it's not every chart is super clean. Like the original US 30 example, that seemed really, really clean, really easy to sort of mark out spot. I say easy, but quotations.
Yeah.
But with this one, still the understanding's there, but you can see, especially early on before you start to mark it all out, there was a bit more complexity, an understanding. And I think that's where that chart time comes in that we talked about.
Yeah.
There is a level of really training your eyes to understand the concept and
to identify
yeah. And again, it's simple. It's a really weird thing, right? It's a simple concept. It's one concept versus what most people are doing where they're trying to layer 4 or 5 different patterns and 3 different concepts and 2 different indicators and fundamental news and a time versus this is more time and liquidity.
Exactly.
And time isn't really the liquidity is most important. Like you could trade London session if you wanted. You could trade any time.
Yep.
But you just find for your routine and for your edge to focus on this time. Right? And especially where you're based as well. Like,
Yeah, in Canada, right, yeah.
Because I know you did a stint where you were trading London.
There was a time, back then in the Forex days. Yeah, I was trying to stay up for the London session and stuff, but that was a killer, right? That's 3 a.m. in Toronto, so.
I love that.
But
cool. That's an amazing example as well. And, what I love is that, again, it's fractal, right? And this is more sort of your scalping / day trading, depending how long you hold the trade for. but it works. Yeah? And there is an element of that window of time. I actually love the window of time thing, because I get the aspect of like, for some people it can be a negative because they may work that time, right? That optimum time. So I understand that side. But as a concept of using a specific time window, I love it because it starts to eliminate, as long as you stick to it, that is, eliminate where mistakes can be made and eliminate sort of low probable scenarios.
Over trading, any of that kind of thing.
Yeah, and a lot of the time, there's optimum times you won't see a lot of chop, a lot of ranging. While if you trade outside of those times, which a lot of people do, unfortunately, that's where they end up just sitting in a trade that's going sideways for like 2, 3, 4 hours.
Your head in, right?
Yeah, and then by the time the actual momentum comes in, you've either doubled up your leverage for no reason, simply because you've been chopping around, or you get out of the trade, and then they actually play.
And then it plays out.
Yeah. Classic.
Yeah, that is a classic one.
What we got left? We got another.
Yeah, I got another NQ example here for you guys. This again, all recent trades, to be honest. These are all, except for the first one. These trades are all the ones I've taken. So, again, this is going to be on NQ. April 1st, if you guys want to go back into your own charts and look at it, that's cool. But yeah, we'll start off here on, wow. Okay. So we can identify right away lows are taken, right? Not just any sort of lows, but these are lows that we've been respecting once, twice, 3, 4 times, right? And then we had this big bullish move up. Finally, the sell-off comes and we've trapped. Anybody looking to buy above these lows have been now taken out of the market, right? So that right there gives me that confluence. Is now I can start looking for that bullish move back to the upside. Of course, not right away. I need to pair this with liquidity always, but that right away is a massive confluence for me. So hopping in on the 5-minute chart, as per usual with me, we'll hop on we'll mark on the stock open. Perfect. So this is another, probably a great example for you guys because the delivery overall is very clean, but high has been taken here. Okay. Going back to my strict rules, my system, my plan is I will not be looking for a buy until this low is taken out. Okay. So from low, we'd end up trading higher, create all this internal liquidity, trend line, however you want to call it. It's just liquidity in my eyes. Finally, we take out this high, inducing buyers into the market. What do I mean by that? They're going to be looking at this as a BOS. Yeah. Okay. Market structure shift, whatever they want to call it. That's fine. Maybe looking for an area to buy from there. Maybe somewhere in here, or there's imbalances down here. And then finally at the low, maybe an extreme area here. Nonetheless, these are all areas I'm going to be viewing as a trap. Okay. If there is a reaction, false, short-lived. Okay. Perfect. So approaching stock open in this example here, I did want to see stock open occur before taking a trade. Before we continue here, we need to look to the left-hand side. So what do I have here? Again, simple stuff, liquidity. This price action I am circling right here is, again, simple structure, just like this. Yeah. So use that to your advantage. We understand liquidity is above these highs, so I can mark that out. Boom. And you can see we've respected these highs here once. And again, over here to the downside again. So this is just building liquidity here at this blue line, right? Yeah. Perfect. So approaching stock open, we get the lows respected. So I'm going to drag over this line. We have respected the lows to the left-hand side. This is at New York open. We've gone long, very, very choppy price action before stock open. Finally, stock open occurs, spike up, clearing internal liquidity. Now, why is this important? If I open this up to the 1-minute chart, this is important because, yes, we have taken liquidity from the left-hand side, but this also induces buyers. So again, same concept. They're going to be looking to buy this thing. So you can even see, look how the market gives them the reaction here. Yeah. So anybody that bought down here, they get the reaction up and then they get trapped. And all that is just building more and more liquidity below these lows. And of course, below to the left-hand side, the one I want to be buying below, right? Perfect. So I drag that over. You can see stock open again, spike up, inducing buyers, and then traps them. Okay. Now that we're trading below all the liquidity, this is now when I want to be looking for entries. But how can I take an entry off this? Again, I want to see some sort of level of liquidity taken. And that overall is going to be an area I'm looking to take an entry off of. And if you look right down here, look what happened. And I believe this was the day before in New York. We spiked out these lows. Okay. And never returned back, right? What do I mean by that? Spiked it out and just went bullish. Yeah. Right. And this is the day before. So this whole area here, is definitely an area I can look to take a buy from. Okay. And again, the whole concept around this, the logic around this is there's no liquidity below this low right now. So I'm able to take an entry off of it. Now, sure, we've respected this blue box and moved away.
Now there's
now there's liquidity there. Perfect.
Okay.
That's fine.
But until it moves away, that is then a safe place.
Exactly.
Because the liquidity really is the level that you've waited for.
Exactly. And again, just same thing. I'm taking an entry just like this, stop loss right below it always. And just targeting liquidity on the other side of the market. Just like that.
So it's that line to the left. Right?
So these internal highs that we marked on beforehand, right? This, again, is simple stuff. All this price action is on the left-hand side is the structure liquidity, right? So any sellers that were getting in at these highs, there's liquidity right there. Right, so just like that. And I believe in this example here, I did take small partial above the high because that was my first target. Right, I'm not taking it at a specific RR. These are targets I have in mind. So target point here.
And the difference between isn't huge.
Yes,
right?
exactly.
But if price was to reverse for that day or for any reason continue lower, or at that point, would that liquidity then become valid on the lows for the blue box, for example? Because it's led to a move away and broken a...
Of course, again, from a pattern perspective, sure. But you have to remember, we always want to be pairing the higher time frame, right? That direction, that bias.
So you want this side.
Yes. If I wanted to frame out a whole other buy scenario, for sure. Since we have now taken out this high, if price came down to the lows, I would never be buying this, right? I'd want to see price below these lows now, right?
Yes, yeah. Okay, so you wouldn't buy, let's say if it did that, came back down, you still are waiting for this to get taken.
Exactly.
You wouldn't look to buy here though.
No, exactly, because the same
no matter what.
Exactly. Because that high is taken out, I need to see this low get traded below now.
Would you say, this is a really good question, I guess, for people who are very interested in this style, no doubt. Would you say, though, that is a problem that traders who learn this system have early on, is that they will do everything else right, but when it comes to that scenario there, they will then look to buy.
Yeah, so...
And take a loss, let's say if it does lose, and then blame the system. It's not working, and getting frustrated, versus actually you've broken a key rule of the system there.
Yeah. A lot of people that have come to me from like a smart money background, this is basically trading against what they've been taught in the past, right? Again, they like to see that BOS in the market and then trade higher. So they'll enter positions here. So based off their old teachings, they would be looking at enter positions here. But based off my system and my teachings, I'm not taking entries in this area, right? It needs to be below this low. So yes, these guys make mistakes in the beginning, but they come to a quick realization that they understand where they were getting trapped this whole time, right? Again, because there's that more of that why with this system. Again, nothing's 100%.
Because the beauty for you is if you've partialed there, let's say.
Yes.
Right? You'll break even then at that point.
100%.
Yeah. So even if it does come down lower and take out that low, and then you're able to execute because it gives you a reason to.
Yes.
That's fine because you've already taken profit.
Exactly.
You've then been taking out break even for the rest. And then you're essentially just taking one level of risk. If anything, you have a buffer now, technically.
Exactly, for the next
winning trade. Yeah.
100%.
Versus you break even, cool, but then you execute a new trade, which doesn't really fit your system because, yes, you have a target still to target, but you don't now have liquidity that's been swept. So therefore, regardless of whether it's this internal or fair value gap or a lower time frame break structure, it doesn't matter because it's not your system. And that's always important, regardless of your system, whether it's this or another one. I think that's where a lot of people do make mistakes consistently because what they'll do is they'll maybe execute the first trade, fine, to the system, perfect. But then when it comes to them scaling in, those trades that they're scaling in actually don't fit the rules at all.
Exactly.
But because the original one does and hasn't maybe completed yet, they believe that those still fit. Does that make sense?
Those scalers, they're almost trying to force it to their original trade idea, right?
And they assume that those are fine because, and if anything, they probably convince themselves that this trade will work out because I've already been in a winning trade and partial. This is like a bonus. Right? This is the market giving me a chance to get more, which never really happens.
No. I mean,
doesn't happen often.
You have to understand when you back up and you put all these things into perspective, you have a plan and rules put out in the first place for a good reason, right?
Exactly, yeah.
And if you can't follow that, what's the point of putting them together in the first place, right?
I love that.
Hey guys, this is normally where we finish off the episode, but today, for the first time ever, I asked Marco to trade live using the exact same concepts he just broke down on the whiteboard and showed trade examples from. So, without further ado, let's get into the live session that Marco did in New York session on NASDAQ, and you'll see the result for yourself. Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with PropFirmTrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what PropFirmTrader.com does. PropFirmTrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on PropFirmTrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. Just look on screen right now. You can see futures firms, you can see CFD firms with offers up to 50% off, which is incredible. And you can also see Alpha Capital there with a one-step challenge with 25% off using PFT1. And there's so many more exclusive discounts only on PropFirmTrader.com. It is the go-to site for all prop firm traders out there. And one thing I'm really excited about that I personally helped to organize was the giveaway of giveaways, the 7-figure giveaway, just through purchasing your challenges for the best price through PropFirmTrader.com. Every single week, you will automatically be entered into an incredible giveaway, a collaborative effort across all of these firms on screen, between 100 to 200K accounts, over 7 figures. It means that one person every single week who's made a purchase through PropFirmTrader.com will be getting 7 figures in challenges that can completely revolutionize your trading journey. Again, all you do is for any of the firms on PropFirmTrader.com, use the code PFT at checkout, and you will automatically be entered every single week. The link for PropFirmTrader.com is in the description below. Now let's get back to the episode.
Just entered positions on NQ here. Lows stabbed out post NYSE. So after stock open, we've had this move up to induce buyers, trap them, and then we've hunted all of this liquidity. Okay, and if you look at the timing here, this is pitch perfect. Look how the 4-hour closed. So right at 10 a.m. The 4-hour closed, spiked it right into my area I want to take a buy from below these lows. And I've added volume there. Okay. These highs are of interest to me. Okay, so I'm going to mark out this one. You have an imbalance above. Also, like the highs we left in London. Okay, we have relative equals. Also 4-hour high. And then finally, there's also a high to the left over here. So, a couple targets on the way up. But I am bullish on NQ right now. So let's see what kind of PA we get going through this. Just because we've ran 4-hour low does not mean this lower time frame low isn't off the cards yet. This can definitely still get spiked out before the move starts going up. You can see we're respecting in this area at the moment. All right, so sellers, ideally in this scenario, they want to see price push to the downside from here. Okay, and again, just reach further targets on the left-hand side. Sometimes what occurs is we'll induce lower once more, and then the move will start occurring. That's why I got my stop below PDL right now. 5-minute candle here closes in 25 seconds, which is this low. First target from our average entry area right now is about 320 ticks away. Only got 5 micros on currently, so if hopefully, doesn't mean it's going to happen, but if we get some sort of entry on the way up, obviously I'm looking to scale some more risk into this trade. If not, and it just flies, it's one of those ones. It is what it is, so we'll have to manage accordingly here. All right, my eyes are looking at these lows right now. Could spike them before any bullish move occurs. Just going to stay aware of that for now. Lows are spiked here, 5-minute low. So if I have the 5, you can see now that 5-minute low is spiked out. We have 7 minutes until the 15-minute candle closes. Could still chill at the low for a little bit. So look, now that you can see sellers enter here, right? So what does that tell me? Liquidity. Next 5-minute closes up in about 45 seconds here. If we can get a nice 5-minute close above, I will add a little more volume. Not my favorite type of entry, but the risk to reward is there and the timing is there for me. So I'm okay with adding this risk on. Basically, if I do add, I'm basically predicting that this low down here, printed at 10.05, is the extreme. Okay, the low of New York. And you need like a heavy timing confluence in order to take these kind of entries. But nothing convincing. Like I won't take anything now. Not a strong close for me. And next 5 minutes just closed up. So you can see here. Alright, lows have been spiked out once more. It's completely fine. Like I said, we can hang around down here for a bit. Wouldn't be surprised before that extreme prints. But look how many times we've tapped into this area right now. So these highs are of interest right now for me. Okay, stabbed in once, twice, and moved away. Liquidity above these highs here. All right, so timing now, 10:14. Now we have a 15 close in approximately 45 seconds here. I feel like we're getting close to maybe printing an extreme soon, but I'm not in the business to catch bottoms. I'll just let price tell me when the a bottom is in. All right, good reaction off the lows now. 15-minute here. We just opened, so 5-minute close happens in about 2.5 minutes. We are looking strong though, so good sign so far. Ideally, I do want to see some sort of lower time frame confirmation on the way up so I can add more volume. Because I'm confident in the direction of this move. However, it does not mean the lower time frame is always going to deliver us an entry. Nothing of interest yet, honestly. Just struggling at the high. Inducing sellers. That's it, really. But yeah, we got some slow PA currently. We'll see how it unfolds in the next 30-45 minutes. Alright, starting to breach some highs here. Timing wise, we've got 10:25, so 30-minute will close up in about 5 minutes ish here, 4.5 minutes. Same with the 15, that aligns. Nothing really to point out right now, to be honest with you guys. We got all these internal points, obviously, I'm looking at. I do want to see us push through, run these internals, obviously come for these highs as well. All these blue lines are essentially targets on the way up, right? So, as for lower time frames, I do want to add. However, I don't see an area that I can add in yet. Kind of just struggling around right now. Just ran this internal here. We can mark that out. Got this lower time frame low down here. Could add maybe below. We'll see what it looks like. It'll be about, because I'll be covering my stop below here, so it'll be about 90 ticks of risk. All right, picking up some momentum right now. I do see something in the lower time frames now. So now that we've taken out this high, if we can get some sort of rally now, a little sell off to the downside, I will add below this low here at 10.19. Okay, but we need to trade below this low, and that will be an area I can add some more volume. And 30-minute just closed, beautiful rejection. I'm confident enough in the setup to roll my stop below this low we've created here. So I'll take some risk off the table, which is great. And yeah, let's continue to monitor price action accordingly. We have spiked out previous 30-minute. We're getting a little reaction right now. Lower time frames. Again, if we can get some sort of push down, spike below this low, could add volume, especially now that I've covered risk on the initial entry. All right, guys, coming down here, approaching this low, I'm going to add volume below this low for sure. We'll add another 3 contracts below this low if we can trade below it. All right, stabbing the low here, adding a little more volume. I'm gonna adjust this sell stop. Cool. Now that we've traded below this low, I do want to see price stay above 23,142, or else this scaling is invalid, which is completely fine. Risk is quite minimal now, I'm not gonna lie, since we did roll our initial stop. Let's see what kind of price action we get now. If we want to frame this out going forward, since we have taken out this low and this low where we've now taken our entry from, this tells me now sellers are interested. Okay, which means they want to see price back at these highs. Okay, and then a push down. So if we get reactions in here, do not be surprised. Okay, we are pushing to the extreme now. We'll see how this plays out. We're getting a decent reaction right now. We're on the M1, so I don't want to be too influenced by a single minute candle. But again, once we trade back up into this high, since we've taken out the previous and sold off, I won't be surprised if we struggle in here for a bit. Okay, and I like anticipating these things and expecting it, because when it does occur, or if it does occur, I was already mentally ready for it, right? Do want to see us hold here. This is like the last resort kind of area for myself. I believe even if we come down, spike the low, we will revisit this one as well, which will take us out of the trade. So yeah, I do want to see us start holding, pushing up. Once we start trading into this red box area, I will be more convinced of the trade. I just want to see that rejection, which we're starting to get right now. Kind of like my last area now. We'll hold up. We'll see. Highs taken, maybe lows. And see that push up. Not looking too pretty though. I did want to see us come out of this area a little quicker than what we've been doing right now. It is still valid though, of course. Just coming down to my confidence in the setup overall now. All right, decent rejection coming in now. Unfortunately, since we have just built up this liquidity here, these lows, this is not out of the cards now. So there could be a pullback into a continuation still. So I'm not going to rule that out. Stop is going to stay where it is. I'm not convinced otherwise. I'm not going to roll it because out of fear or anything like that. When the chart tells me to, I will. Just got to stay aware of all outcomes right now. Okay, approaching this trap area. I'm not saying there has to be a reaction, but there definitely can be a reaction from this area. However, if there is, short-lived, I do want price to the upside. Okay, we will be taking partials above this high. As we stab above this structural point here, could start rolling my stop little by little. Okay, but I won't be paying myself yet because we're only looking at a 140 tick move. I'm not interested in a small move like that. Looks like we are getting this pullback now out of this trap area, the red box. My eyes are on this low here. If it wants to come down to the extreme, it definitely can. Okay, just what we anticipated right now. We're getting rejections out of this area, right? Now trading above this 1 minute high. Yeah, just have to wait, unfortunately. Price can get really sluggish in these kind of areas sometimes, so just gotta wait. It is what it is. All right, so look at this. All right, and this is what we were talking about before. We anticipated this to happen. We expected it, right? So yes, it can get boring. Yes, it can get frustrating if you allow it to. But understanding where price can slow down at and react at is important. Okay, especially when you're in a trade. As we start trading above this high, if we trade above the high, of course, I will start covering my risk, like I mentioned before. And then after that, I do want to start seeing some volume kick in, start running these highs on the left-hand side, and eventually getting to some of our target areas. This is aligned with the higher time frame, so there could be a decent move. However, I don't need the whole big move. That's not my job here. All right, we got an hourly close. Hourly 30, 15. Everything's closing in 5 minutes here. Look at that 30-minute wick we're leaving. Big rejection off the low. Okay, again, we kind of predict that 10 a.m. was going to be that low of New York. 15 minutes coming. Next candle. Looking quite bullish right now. Again, still trading at that high that we've been talking about. 5 minutes, same thing. We've had some consecutive 5-minute closes to the upside. Again, still respecting the high, but we'll see what it looks like going forward here. It looks pretty good. And highs are now being taken. So I will cover some risk for sure. Gonna roll my stop a little bit more. Now the risk is minimized. Like it's small now, right? We have 50 ticks of a stop available. We're gonna stay on the 5-minute here now. Now that we're kind of out of this lower time frame area. I do want to see volume start kicking in for sure. Again, partials will be above this high, which is roughly 320 ticks. All right, we've got our hourly close. Let's take a look at this. So, hourly big rejection. Take a look at the timing again, like we talked about at the beginning of this video here. Spiked out previous 4-hour low. Okay, in 10 a.m. Spiked out 9 a.m. And then we've got that rejection to the upside. All right, 30-minute ended up closing bullish after that big wick. So we wicked down on the 30 and spiked all the way back up and closed back above. Starting to get a nice push. Finally. I will be closing a nice partial above this for sure. Above this high here we printed at 9:35. So this is right after stock open. Also, definitely going to start, we are roughly 200 ticks in profit currently. There is no reason why I'd want to see price back down to my entry. That'd be foolish of me to be this much in profit and let price come back to take me out in the red. So, stop is now rolled to BE. Timing-wise is getting a little bit late. I usually don't stay on the chart this time. So we'll see what price looks like when we approach this high, what timing's looking like when we approach this high. I might close out full. I might close out a partial. We'll have to wait and see here. We're getting a steep pullback right now. Not ideal, but we'll see. We'll see. This could just be a move inducing sellers right now. Nonetheless, risk has been covered. No partial points has been hit yet. All right, so there's no if, ands, buts. I had targets in mind. If it doesn't reach it, then there's no profits, and it is what it is. All right, 5-minute spiked out here. Okay, again, I'm viewing this bearish move as a pullback right now. Hopefully it is. It could sell. Again, just per my setup right now overall, the higher time frames, I am viewing this as a pullback. Okay, and we did spike 5-minute. We running some sort of internals to the left. However, this leg here is not pretty. Okay, so I do see downside potential. That's why risk is off the table now. It's in the market's hands. If it wants to run to our target, great. If not, hey man, it's a BE. My lower time frame highs taken, lows taken. I do want to see the move start now. That continuation up. Let's see. Let's go NQ. Give us a little push here. All right, 5 minute just closed up. Here's another 5 minute low just taken. Timing is getting tough now. It's 11:15. I do want to see this move start occurring relatively soon. Okay, it looks like this pullback we've had, this bearish move to the downside, looks like it could be finished. All right, we've held this low here. Now we're showing momentum back up to the highs. Reason being why I viewed this as a pullback was look to the left-hand side. Right, we've done nothing. Right, like look at this bit of price action we got here. It's just a buildup of liquidity. This high tapped into what? Absolutely nothing, right? And just fueled a little sell-off, in my opinion, to induce sellers. So this area we're tapping into right now, view it as a trap as well. Okay. However, I don't believe we will stall in here for too long, but it is an area that sellers would look to take this asset lower. All right, guys, as we start pushing above this high, again, due to timing, and these are just things you have to react to sometimes, I will start partialing in this area, and then full target will be the high. That doesn't change. All right, guys, another 30-minute close here. It is 11:30 now, but again, nonetheless, still a great close. 30-minute closing bullish above previous high, indicating, right, if we're analyzing just raw price action right now, it's just telling us we've got continuations on the cards currently until something tells us otherwise, right? And if we hop into the lower time frames, you can see this area that we've pointed out before that we're still trading in. I didn't believe we were going to stay in it for too long. It's been about 6-7 minutes now. So I mean, these are just one of those trades where we've been struggling since entry, right? We've been in this trade for an hour and a half now. Not the cleanest bit of price action, obviously, coming out of that, but not every setup's going to be rocketing to your TP or melting to your TP. Sometimes you just got to stick it out, manage accordingly. I'm not going to let these candles influence me to close early or manage the trade incorrectly, right? Sometimes all it takes is taking the entry, setting your stop and a target. What happens in between, it's irrelevant, all right? Now, I don't want to say irrelevant, but don't let these candle closures influence you and make you get emotional and stuff, right? Definitely possible for price to run these lows now. These lows I've just marked out. All right, so maybe a spike below and then see that continuation up. That's what I'm leaning towards right now. Looking at this from a retail perspective, right? Anybody looking to sell in this red box in this area, what are they going to view this as? Right? Like a break of structure, a change in momentum. So they might start looking for bearish moves, right? Automatically, when that happens, this induces sellers into the market, which now tells me there's even going to be more liquidity above this high. All right, so I'm not against price taking out this low and then seeing that continuation. So just staying aware of that, of course. Can move from where it is now. Of course, the market can do whatever it wants, but if it does spike this low, it makes sense to continue bullish. All right, we're approaching this high now. Man, it's been a bit, but patience. It's what it's about sometimes in these markets, man. It's not always going to be so clean. As we stab this high, hopefully we do soon. We're leaving a little bit of a wick right now, but as we stab this high, we'll start scaling off some volume and paying myself. And of course, our target remains the same up here at 23,237.5. Time is getting definitely tight now because we're approaching New York lunch hour. Typically, the hour tends to be dead in volume. And I mean, if we've been quite dead now, I can only imagine what we're gonna get through the lunch hour. So In an ideal situation, we move now, and I'm out of this position before lunch, but we'll see what happens here. All right, high take in here. Gonna be paying myself. Taking some off, and letting this thing run to these highs. Ideally, now I want to see this this momentum coming. I mean, we've been asking for it, but we've been slowly moving to targets, but just so slowly, right? I mean, slowed down in this area, which we expected. Slowed down in this area, which we expected. It'd be nice to just see that continuation now, that push up to these highs. I do want to be out of this before this lunch hour occurs, ideally. I'll look to take off a little bit more volume soon, and then be 100% out at the high here. All right, taking off another 2 cons here. I got 4 cons left. All right, guys, another 2 off here. We are so close now to target. We got, 20 ticks left. It's been how long now? We can't complain. It's been an hour and 50 minutes. But we are like 80% out of the position now. Just need that last little push. We can close this remainder out. All right, guys. Wow, highs taken. Let's close out here. Oof! And look at that move. Wow, we've been waiting for this now for quite a while. What a move up now. Wow. That puts us at about 1,600 in 4 accounts. So 32, about $6,400 across 4 accounts. Great day of trading. Wow.
Well, Marco, I really appreciate you breaking that down for us today. There was no gatekeeping. I know that's a lot of what people think when it comes to especially unique strategies like this. So I really appreciate you breaking this down over multiple concepts as well. I'm truly fascinated as always. And I've been trying to deep dive into this sort of style of trading for a long time. But everyone at home, drop a comment with your biggest takeaway from this episode. Drop a comment with any questions you have on this style, because I'll make sure Marco replies to them and checks them out. Maybe we do a part 2. But hit subscribe, hit like. Links for Marco will be in the description below, so check those out also. Make sure you give him a follow. We're trying to get him more on X as well, get him involved with the trading community, so go check that out. And hit subscribe. Other episodes are on screen, and until next time, take care.